Imposition of tariffs by President Donald Trump has sparked extensive debate regarding their impact on the U.S. economy. These tariffs, aimed at protecting domestic industries and reducing trade deficits, have had multifaceted effects on consumers, businesses, and international relations. A recent report from creditcards.com reveals that 1 in 5 Americans are purchasing more goods due to concerns over tariffs imposed by President Trump. These tariffs have increased the cost of imported goods, leading to price hikes for consumers and contributing to inflation across industries reliant on foreign materials. As a result, many are stockpiling non-perishable food, toilet paper, and medical supplies in anticipation of rising costs. The report indicates that 22% of respondents felt Trump's tariffs had a significant impact on their large purchases, while 30% reported some impact. Additionally, 23% of Americans anticipate an increase in their credit card debt due to these purchasing behaviors. The uncertainty surrounding trade policies is also prompting some businesses to consider relocating production to the United States. The housing market has not been immune to the repercussions of tariffs. Home builder confidence has dropped significantly to the lowest level in 5 months, primarily due to concerns over tariffs impacting the cost of housing. The National Association of Home Builders Monthly Confidence Index fell 5 points to 42, falling short of Wall Street expectations. This decline is attributed to increased costs of building materials resulting from tariffs on imported goods. The average cost of a newly constructed home could rise by $17,000 to $22,000 due to these tariffs. High mortgage rates further exacerbate the challenges for builders, leading to reduced incentives and high inventory levels. With the spring home buying season approaching, builders may face increased competition from the resale market and more pressure to offer attractive deals on mortgage rates or reduce home prices. While the U.S. grapples with the domestic effects of tariffs, certain Asian economies are emerging as beneficiaries amid the trade wars. Vietnam, for instance, has expanded its global trade links and attracted substantial foreign direct investment. Similarly, Malaysia and Singapore have benefited from investment diversification, with Malaysia focusing on high-tech sectors and Singapore on financial services. India has also seen modest gains in export market share to the U.S., driven by infrastructure improvements and initiatives to boost bilateral trade. These countries are positioning themselves to capitalize on shifts in global supply chains and increase trade opportunities. In a significant political development, the U.S. Senate confirmed Howard Lutnick as the new Secretary of Commerce with a vote of 51 to 45. Lutnick, former CEO of Cantor Fitzgerald, is a staunch supporter of President Trump's stringent trade policies. In his new role, Lutnick will oversee 50,000 employees of the Department of Commerce and focus on managing the import tariffs imposed by Trump. These tariffs serve as an economic tool to raise funds, protect American industries, and pressure other countries to lower their trade barriers. Lutnick has dismissed economic concerns about inflation resulting from the tariffs and supports widespread tariffs to force foreign concessions. Additionally, President Trump has announced plans for reciprocal tariffs that could challenge established global trade rules. Investor sentiment towards U.S. investments appears to be cooling. Recent Bank of America surveys indicate that fund managers are showing less enthusiasm for U.S. investments, forecasting lower returns for U.S. equities and the dollar. This growing skepticism is driven by geopolitical turmoil and policy uncertainties under President Trump's administration. More managers now favor European equities, predicting stronger performance from indices like the Euro stocks, while deeming U.S. stocks overvalued. This shift reflects concerns over escalating trade tensions, a substantial U.S. budget deficit, and a record shortfall despite a healthy economy. As a result, fund managers are reallocating investments, with many now viewing Europe as a more promising market than the U.S. The Tax Foundation has been tracking the economic impact of President Trump's tariffs, including the expanded steel and aluminum tariffs. Their analysis indicates that these trade barriers are projected to reduce real GDP over the coming years. The effects on trade flows, prices, and output are expected to peak during the first half of 2025 and then begin to subside. Tariffs are anticipated to reduce the level of real GDP by roughly 0.5% and raise consumer prices by 0.5% in 2025. As a result, tariffs are also projected to reduce average real household income by $1,277 in 2019 in 2025. The Tax Foundation expects the effect of trade barriers on output and prices to diminish over time as businesses continue to adjust their supply chains in response to the changes in the international trading environment. By 2035, in their projections, The tariffs lower the level of real GDP by 0.1%. In summary, President Trump's tariffs have had a profound impact on various facets of the U.S. economy. While intended to protect domestic industries and reduce trade deficits, these tariffs have led to increased costs for consumers, challenges in the housing market, shifts in global trade dynamics, and changes in investor sentiment. As the U.S. navigates these economic complexities, it remains to be seen how these policies will shape the nation's economic future.